We all have these balance sheets. We all have these income statements. Everybody, okay? I think that's clear. But what happens when you have a business and you're a single person? Well, guess what? You still have a balance sheet and you still have a P&L. But this right here is individual and this right here is a business, okay? So please separate individual and your business, even if it means just putting it in a shoebox. I don't care. We can talk about it later. If you have a credit card, zero that thing out or figure out the balances and use one specific to your business. Either that, if you're gonna use cash, like I'm gonna pull out 500 here, but all of it's gonna go down here, put it in a shoebox and throw the receipts in there, and hoping that this will help educate people why it's so important. Because when I do your books at this level, I don't really care about what you got going on in your personal level. So that being said, I want to make sure that we understand that your business stuff, what I like to do at the end is we're gonna review this. I make sure that everybody I deal with right here at this level, and the majority of my clients are at this level, I educate you. Like, we look at this, we make sure that you're making money in the best possible way, that we aren't missing anything, that we're not, I review this piece of it. Like, if you're selling something, I'm looking at what our markup is, because your markup can be different depending on what it is you're selling. So I'm looking at this for information on how to make your business better, faster, and how we can grow it faster than we are right now. And I can't pick this apart when you start mixing in everything under the sun, okay? You guys want to skim off right here because I want to pay tax on that, so you skim. So you take off from your original revenue, whatever that is. You skimmed off the top. I don't know. I just deal with this piece, okay? So you skim off the top, and then you're going to want to take all these expenses when you already lowered that. Do you realize that a lot of this can be claimed based on this? I think people need to get that, because when you're skimming off this, you also are making me reduce all of this, because that does not make sense. Like, it's funny when you brought in $1 million, you spent all this, and now you made 10,000. But does that even make sense? Because people want to reduce this, so they'll say, no, we didn't make $1 million, we made 500. You're not spending all this if you're only bringing in this. The thing is you show everything here, so then you can claim everything that you think that you should claim, and then I like to know the truth. Now, for those of you that think that, you should have enough money saved in your secret stash spreadsheet to book a call with me, and I can get into that in detail. But it irks me when people want to do this kind of thing, because those are the people that are going to want to argue numbers. My numbers will pass an audit. My numbers will be presentable to a bank. You want to do all of this, I get it, because it's going to reduce your tax liability, okay. But then tell me this, how are you going to buy a house or get business credit? I see that happen all the time. And in the beginning, your business credit is based on the owner's credit. When you don't have much to go on, it's like a cosigner. When you don't have credit and you try to buy a car, they want a cosigner because they want somebody that's going to say, yeah, they're going to pay it. And if they don't, then I'm on the hook. Same with your business. But yet everybody wants to screw over their business, thinking that it's like the same entity. What people fail to see is when you have a business, you have two of these. You have this and you have this. Okay, and now for those that are going to throw in their house and all that stuff, yeah, you get to claim interest on a house. And again, these are the same way that I said down here. These are contingent upon stuff too. So those of you that make too much money, you don't get to claim certain things. Those of you that don't qualify, you don't get to claim certain things. So I I don't know where the finesse or where I'm losing people, but this is it. It's not to hide money or skim off the top. It's to do as much as you can over here, claim as much as you can over here. Is when you are an employee over here, you have wages. Those wages give you a W-2. Okay? The only reason why we get any tax documents across the board is because everything in accounting is a plus and a minus. So your wages for your employer to claim that, they need your social security and they need to show that they took out tax, they did it correctly. So again, when you're pitching things and when you're making your business plan, I'm very thorough when it comes down to here, and I pick those apart regularly. I do offer that. I think people need to understand that there is some planning. When you make your business plan and you are presenting it to a bank, it needs to make sense. Like, I look at those things and I'm like, they didn't count this or that or this or that. There's a lot of things that you can and can't claim, but the more that you are honest, the more that you can do. That's where the wiggle room is. Like, everybody wants to say, well, what about these big corporations? Yeah, it's because when you have a corporation, you show this. It's very hard to lie when you are showing this on a tax return. Corporations have to show this. We all claim this, but when you're a corporation, you have to show this. So you cannot finagle that because they have what it was last year. I mean, you can have some wiggle room, but no, anything that doesn't look right is going to get opened. This is how you get credit. This is how you're able to do things. In cases with property, when you have so many assets on either side, there might be a little wiggle room for your credit there because they know that, well, if you lie and can't pay it, I can pull one of those assets. And that's what a secured loan or something looks like. It's because we're going to pull from your assets. Okay, and I can go flip this around a number of different ways, but this is the bare bone basics for basic financial literacy. So where I'm going with this again is when you have a business and this business has partners, this business files its own tax return separate from yours, because if this was just you, a lot of people file it on a Schedule C and claim it on your personal tax return. So the Schedule C goes with your personal return. When the business does the tax return, they issue K1s. This K1 is basically, it gives each of the partners, however many partners you have, it basically tells them their piece of the profit. So if you made, again, we're going to keep it in easy terms. If you made $3 profit, we can add zeros accordingly, then typically it's not going to just go split evenly. It goes by the partnership agreement. So for those of you that want to set up all these LLCs without a partnership agreement, that also won't pass an audit. What equity is here is if you list, let's just list two owners. This is you, this is me. Okay, when we started the business, we both put in, we're going to do easy dollars, $5 each. Okay, so that goes to the checking account. So in our checking account, we have $10. 5 from you, 5 from me. What happens with this is, okay, we probably spent, let's just say we spent $5 of it. We didn't make any money. Okay, so now there's $5 in here. Okay, I know this is kind of messy and hard to look at, but maybe I'll type something that goes over this. So now this is $5. Again, we still have this in our equity. We didn't earn any money, but we spent $5. So right now, this is at a negative $5. That is what we made for the year. We have $5 still sitting in there. We contributed 10. This is how equity works. And I'm going somewhere with this, so don't lose me. Okay, when we were if this is what it looked like, and we're at a loss. We're at a negative 5. We can put zeros there accordingly. So how this 5 goes, the company says we are at a loss. So how are we going to split that? Well, it's going to go 50-50. So you're going to claim negative 250, and I'm going to claim negative 250. And that's what our K1, and then this K1, we give it to our partners so they can claim it on their personal tax return. So instead of wages, we also have a K1. So you can have wages and a K1. But that's what the tax documents are. So for those of you that are thinking that you're gonna dance around all these different ways, everything is tied to your Social Security, you guys. Your credit cards, your loans, your place, anything. So you can twist it any which way you want, and some people even forget certain tax forms. Again, they know what it is. Okay, you're not getting away from anything. So my whole thing is, I don't really want to deal with the people that want to get away from it. I'm here, if that's my piece of the pie, and that's what I owe to keep the world going around, then that's what I owe. And I'm gonna own that, and I'm gonna pay it. I mean, the goal, instead of us trying to like skim off the top, isn't the goal just to get more and be able to pay that like it ain't nothing? I mean, and if you're gonna argue that with me, you're probably somebody I won't go to dinner with. Because I'm not gonna break up the math at a dinner, I'm just not. But it's not fun if you're the only one winning, because that means you're the only one paying. That's my motto on that. With business, when done correctly, just like the PPP and all these other different things that are available to us, when they are done and utilized correctly, we can all win. I think that's probably one of the biggest misconceptions that I deal with, is that in order to win, somebody must lose. In life, I don't think that there needs to be a winner or a loser. I think we can all win. It boils down to knowledge, and not a lot of people know this. For me, I've made it my mission to kind of turn that around. Like, how can I help more people